Hopefully this thing ain't lagging. Let's see. Let's see. Let me set this thumbnail. Let me set the thumbnail. Why can I edit it? Go to, oh, wait. Oh, like that. Video. Create YouTube tags to where I can copy and paste. Should I put it to how to in style or entertainment? Or gaming? How to entertainment. I'll set it as entertainment so I can get more of a reach. But let's see. Boom, plow, pluck out. We'll go over something. I don't want to cram too much stuff into your heads, but try to get something in that is in the course. Candlesticks. Something ideally for beginner traders. There's a lot of stuff. I didn't really even realize how much stuff I put into this course for $10. The majority of the time, I do see beginner traders make mistakes on how to buy and sell shares. So I think that's what we're gonna go over. Because honestly, if you learn how to buy and sell your shares, you could just jump straight into live trading and watch me trade live, and you can trade with me, and you can just learn from that way based off of experience. Candlesticks. Yeah, we'll do candlesticks too. Where is my orders? Okay, view any slash o boom blackout tatao. Okay, so this is the stuff that you're gonna see in the course. You can see it's very organized. You have the tabs right here. So you can just click through. You can be like boom, 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 boom. Or if you want to learn how to use the scanner, you would go over and click to the yellow, like all the way through there. But we'll just do candlesticks. Candlesticks and order types. Can y'all see that, or is it kind of... Oh yeah, you can kind of see it. So, no, let's do buying and selling shares. I always see people make mistakes on buying and selling shares all the time. Literally every time I get a DM, it's like, oh, I tried to do pre-market and it ended up buying shares during market open. I'm like, did you set it to GTCEXT? No, you had the TIF in today and you click buy market. That's why. So I see different types of order executions for buying and selling shares. Market order. So this is something that you can only use during market open. So what it does is it buys and sells immediately at the best available price in the market. When to use, you need speed over price, entering or exiting quickly in highly liquid stocks. The risk is price slippage. So if the bid and ask spread is wide or liquidity is thin, you may get executed at a worse price than expected. And then limit orders is what I use during pre-market. So how I would do it is I would set my order type to limit, and then I would change where you can see it says day. I would change that to GTC_EXT. So good till canceled, extended hours. That's the only way you're going to be able to trade pre-market is if you set those two things. So what a limit order does is what it does sets a maximum buy or minimum sell price. The order executes only if the market can meet your price or better. So you can adjust it on your active trader. There's a big long ladder that you can adjust your orders with if you don't get the price that you want. So when to use, you have a specific entry or exit price in mind and willing to wait. Risk, your order may never fill if the market never reaches your limit. So if the stock is super liquid, then you most likely won't be able to get your order filled, but the majority of the time that happens is during market open, which is why people use market order for liquidity for super volatile stocks. I see a lot of retail traders use stop orders because they want to minimize the risk. I personally don't use stop orders because I just been trading for a long time to be able to buy and sell my orders very quickly. But this is stop orders is used for risk management to minimize your losses if that price triggers within that stop loss order. So what it does is becomes a market order. Once the stock trades at or through your stop price, when to use to limit losses or protect profits once a price level is breached. Risk in a fast moving market executions can occur at a price well below for sales or above for buys, your stop level. So there's this myth going around that market makers are able to see your stop loss orders. I don't know if that's true, but it may be true the way they like to do what's called a liquidity sweep, which is immediately triggers your stop loss order, and then you'll see it go straight back up. Kind of seems like they can see your stop orders, or they could be just using their fundamentals or their technical analysis to everything that we learn. The institutional traders know it 10 times better. So of course they're going to know if we see a support level, they're going to try to, let's see, where's my mouse at? Can't see my mouse. Okay, so let's just say this is a support level. This is where the majority of retail traders are going to have their stop loss order. So of course they have way more money than us, and they're going to be able to flush the price down to that stop level, get a better price, and make it go all the way up. So stop limit order, I've never used a stop limit order. It's pretty much your regular stop, your stop market order, but you're adding another limit order on top of that. When the stop price is hit, it turns into a limit order, not a market order. When to use, you want to trigger an order only past a certain price, but still control the maximum execution price. Risk if the market runs away past your limit price, the order may never fill. Trailing stop order, I've never used that. What it does, a stop order whose trigger price trails the market by a fixed amount or percentage to lock in gains. When to use, when to lock in gains as the price moves favorably, yet give it room to fluctuate. Risk, like other stops, you may get filled at a sharply unfavorable price in a sudden gap. Market on open, market on close. Never used these before. That just sounds way too risky to, I don't even trade the first minute of the market open because it's way too volatile. But market on open executes at the opening auction price. Market on close executes at the closing auction price. When to use, you want participation in price discovery auction at market open or close. I think the people that use that, maybe, I know there's some professional people that use it, but I think the only people that actually use it is during like Fed speeches or something, when Jerome Powell just spikes the market. I would never do that. You're just asking to lose your money. So this is what I talked about with the different types of order executions for buying and selling shares, special time and fill conditions. So time and force, you will see mainly GTC for your time and force and day. And these are some of the other acronyms that you're going to see. But the main ones that you're going to use is the GTC one to buy pre-market. So putting it all together, speed versus control, market, fastest execution, least price control, limit, full price control, but uncertain timing, risk management, stops, market or limit, let you automate exits around critical price levels, trailing stops dynamically adjust as the market moves in your favor. Special conditions let you tailor when and how to fully your order fills. Choosing the right order type depends on your priorities and the liquidity, volatility of the stock you're trading. Always confirm with your broker's platform exactly how they handle these conditional orders. Terminology and fill logic can vary slightly from one venue to another. So this is how extended hours trading, pre-market and aftermarket works, and why you are limited to GTC extended hours limit orders at the bid and ask. So you can't use a stop loss order in pre-market. It has to be a limit order, which I like to trade pre-market because you're able to utilize level 2 in time and sales. You can't really, there's this thing where you could, only institutional traders can do this, but you can, it's called spoofing, where you could basically manipulate the market by making it seem like a lot of buy orders are coming in, and you quickly pull it. Or you can have, like, I think it's called a ghost fill, where it doesn't even show up on level 2 and it goes immediately to time and sells. If we tried that, we would get banned immediately. But for some reason, institutional traders don't have to abide by those rules. So pre-market typically runs from about 4 a.m. to 9:30 Eastern. Aftermarket runs about from 4 p.m. to 8 p.m. Now, if you are using Thinkorswim, Charles Schwab, and you are living in California, Pacific Standard Time, pre-market happens around 4 a.m., which is when I wake up and I trade live. And I usually stop trading around 6:30, right at market open. I don't like trading market open because it's just way too volatile, and I like to make the majority of the money that I make is pre-market before 6:30. Aftermarket runs about from, so these sessions let you trade outside the core 9:30 to 4 p.m. window, but the thinner liquidity, wider spreads, and higher risk of price swings, which is what we're kind of looking for the price swings, because we're momentum trading, which we're using our scanner to find out which stocks are going to be the most volatile and have the most momentum. Limit only requirement: why only limit orders, market orders would sweep through very thin order books and would execute at a wildly unfavorable price. By forcing limit orders, brokers protect you from unexpected slippage. How it works: you enter a buy limit at your maximum price or sell limit at your minimum price. If the market never touches your limit, your order won't execute. Buy a bid, sell at ask. In extended hours, many brokers further restrict you to buy orders, sell orders. Reason: this prevents your order from walking the book and taking liquidity away from the few participants posting quotes. So this is, like I said, GTC_EXT order. Standard GTC orders remain active until filled or canceled, but typically expire at the close of regular trading. GTC_EXT explicitly persists through multiple extended hours sessions until it executes in either pre-market, regular, or aftermarket. You cancel it manually, or it hits a broker's maximum life of often 60 to 90 days. Why use GTC-EXT? Ensures your limit order carries over to the next extended sessions without having to re-enter it every day. So putting it all together, select extended hours on your trading platform, create a limit order. If you're using Thinkorswim, you will have active trader open. That way you can execute your trades very quickly without having to bring up that order confirmation window, hitting edit, adjusting how many shares, blah, blah, blah. You just have your active trader open. You put in your buy bid. There's like 2 little buttons that you can put. You can customize your active trader. So you can put the buy bid, sell ask. You can already have the TIF in there. You can have your numbers set to where you can quickly buy 1,000 shares or 500 shares or 100 shares. So it's good to have that already activated. Then you have set time and force to GTC EXT, so it spans to future pre-market or aftermarket windows. Submit and monitor your order will fill if another participant is willing to trade at your specific limit during extended hours. Tips and cautions: wider spreads means your limit may sit unfilled for a long time. Lower volume can lead to volatile fills. Watch your execution. Check your broker's rules. Some platforms have slightly different cutoff times, or label GTC_EXT as EXT or GTD with a date. By sticking to this, limit orders at the bid and ask and using GTC_EXT, you gain control over price and ensure your order stays live through each extended hour sessions without worrying about unintended executions or daily re-entries. And then you have your price gaps, no stop orders, of course, because it's extended hours, partial fills. You may only get part of your order filled unless you set it to all or none if your broker supports it. Pre-market and aftermarket trading lets you act early or react late, but you must use limit orders. Please do not do buy market orders, or you're going to see that your order is not going to execute, and you're most likely going to forget to cancel that order, and then it's going to execute during market open. And let's hope that you're looking at your phone during market open, or you're going to lose money because you're not going to notice that, hey, my order just executed. So using GTC_EXT to keep them active beyond just today. If you're active in these hours, always stay alert. Prices can move fast, liquidity can dry up instantly, and fills are never guaranteed. And then this is your level 2, which I go over in my course. I'm not really sure how long this one is. Yeah, this one's super long. Yeah, so this one's level 2 is like the most important thing, especially if you're going to trade pre-market. But I'm going to end this stream because this is the end of, oh my gosh, probably so much of this key indicators and technical analysis from yeah, so much. So now, yeah, I'm just going to end it right here and hop over to TikTok and go over pretty much the same thing that I just went over. But be sure to like the stream, subscribe, and I'll see you guys